What's up, guys? My name is Evangelos Chalikis, and we are back with another Spearhead portfolio where I'm very happy, I'm very enthusiastic, and it's actually easy for me to do this episode because we actually picked the bottom to a T in an exact way. Over the last couple of weeks, I told you the stock market was overextended. I told you that it's 100% logical for it to go down, to take a breath, take a small correction. And we talked about this correction that it's almost done because we were down 8.4%, and the usual stock market corrections are between 5% and 7. Right now we were down 8.5%. I told you the scenario that we can go even lower, and I would buy even lower if we went there. And it's not entirely out of the scene right now. We might drop again. I will tell you the scenarios that might happen next. But I bought here. I was buying as we were dropping, and I will buy even lower too if we drop. But right now it seems that we took a breath on the upside, and we're back on this uptrend, riding it. So this would be ideal places and prices to buy for the long term. What happened in my portfolio? Look at that. I actually increased my positions in my favorite stocks. The goal of the Spearhead portfolio is fast growth, high quality, high cash flow companies with large moats that are kind of like safe havens during the things that we don't expect to happen but happen, like a war that happened. And that war pushed gold on the upside too. But let's focus on the stock market for now. I actually lowered my cost basis on my favorite stocks. I told you that one of my goals was to increase my position in MasterCard, LVMH, Shopify, and Tesla. And my goal was to get to at least one stock. I got to 1.1 stock of MasterCard, 1.4 of S&P Global. I would really love to get that position to two stocks. Right now, I would love to get MasterCard to two stocks as well. And I would like to get to one stock of LVMH, but it's rising now and I'm not looking to buy more. I would love to buy below 720. 720 is a nice price for me. But yeah, these are great prices for long term for those stocks, and I'm very happy to be in them right now. I will ride them in a very nice way. So MasterCard, S&P Global. I bought one or two stocks of Rumble. Not much MicroStrategy. Two or three stocks of Shopify at around 50, and I got full share of Tesla as well. Right now, the portfolio is still in the negative. The lowest it went, I think, was like, let's see, the last couple of weeks. I think it was down, yeah, €1,000 at one point. Look at that. Look at that. It's important to know that because most people are scared when their portfolio is low. But if you have confidence in your positions, those are the best times to actually buy for the long term. Look at that. The portfolio was down €1,000 at one point, more than 1,000, I think. It even got, I think, to 1,100, and now we're back, like €400 up. I don't mind that much. The total value of this portfolio right now is 7.8k, but I don't mind that much because I have already locked in almost €2,000 in gains, realized profit. So the only thing that can happen for now, with my positions being built and my cost basis being lowered, my average price per share being lowered, my favorite positions, is good things to happen. I can hold those positions for the long term because I have confidence in them, and only good things will happen. MasterCard is a stock that I think will benefit a lot from the cashless society that we'll go through over the next couple of decades. MasterCard, I think, will be a big winner for me. LVMH too. People are always buying luxury products. MicroStrategy because Bitcoin will wind up higher, and I will look into Bitcoin at the second part of this episode. Rumble is more like a small hedge because I think the censorship that happens on YouTube will benefit Rumble. That's one of the small hedges I have. I constantly think about selling this position, but I believe in it. I'm investing very little too, so I don't mind that much. S&P Global, it's a stock that follows the S&P. It exists for so many years. You can look this up. It's since 1908, if I'm not mistaken. You can correct me if I'm wrong, but it follows the S&P 500, so I don't mind investing in that company. And it's kind of diversified. It has a large moat, so I don't mind that much. Shopify, I think DCAing, dollar cost averaging into Shopify for the next couple of years will be extremely beneficial and lucrative for Shopify investors. I think it's a stock, I like its products actually. That's why I invest in that company. I like its products. It's kind of overvalued if you look at the current market cap, but I like its products and the subscription revenue that it has. I think it will grow. The users, I think they will grow, and I think Shopify can only benefit from the community and the mode that it has built. Tesla is more of an agenda of the World Economic Forum investment because they are looking for sustainability, they are looking to decrease CO2 emissions, and a stock that is all about electric vehicles, I think will benefit from that, and generation and energy generation and storage systems and AI, I think will benefit from that. Gold, on the other hand, gold is more like a hedge position as well. I don't mind. I have a very big position right now on gold on GDXJ. It's a position that moves more than gold, but I think its time will come. I think gold's time will come. I would love to buy gold when GDXJ when gold gets around 1700. Right now, I'm not investing that much into GDXJ because I think there are better opportunities in the market, but that's for gold right now. We actually picked the bottom to a T. Right now, we will ride the uptrend. SPGI is back over the 200-week moving average. I don't know if that will hold. I'm not sure, but yeah, it's back over it. That's one thing to note. We had a very positive day today for the stock market. Look, over the last couple of times we had such a big correction. It was very sharp, and then it had a very recovery. Something similar happened right now, but it's not entirely impossible to have a small drop again. I don't think it can drop lower, but it's not a scenario that can't happen. It can always happen. We're always open to the possibilities. Anything can happen in the stock market. So the longer it drops, the more I'll buy for S&P 500. That's one thing for now. Let's see Tesla. Tesla didn't go close to its 200-week moving average. It's holding those lines in a very nice way, so I'm very happy for Tesla. I would love to buy if it dropped back to 230 or 210, but it didn't, so I'm riding this position. LVMH is trying to set a bottom here. It's below its 200-week moving average by a lot. It's trying to set up a bottom right here, a base. I think it will touch those prices again before it goes higher. Let's see how LVMH will play out. Shopify is trying to hold and get back to this uptrend that it had. It's above the 200-week moving average, which is good news for now. But yeah, we want to see Shopify regrab this 100-day moving average that it has. That's sitting right now at around $60 per share. I would love Shopify to go back above that price. If it drops back again below 50, 52 or 51, I will buy more shares of Shopify, like 5 or 10 more shares. Those are my thoughts on Shopify. MicroStrategy. The reason I'm in MicroStrategy right now is because I think Bitcoin will benefit a lot. Let's go to Bitcoin. Let's talk about Bitcoin. Since MicroStrategy holds more than 130,000 Bitcoin right now. Bitcoin right now, it got rejected. We talked about Bitcoin in one of the last episodes. It got rejected. It got denied here at the 200-week moving average, but it shows relative strength. So that's a good thing. It shows relative strength, but it shows too that it wants to spend even more time at this big consolidation period, price range between 28k and 25,000. And 25k. So I bought a small position here lately on Bitcoin and on my separate portfolio. I didn't buy that much into MicroStrategy. I might run into my position as it gets closer to 300 and below, but still, the overall picture is kind of negative for now until we retake that 200-week moving average. The prices are good for the long term since we are below the 200-week moving average, so I don't mind buying here that much. But as I see the market right now, Bitcoin is at 27k. Doesn't matter if it's at 20, 25, 30k or even 18. I don't care that much because over the long term, I think the possibilities that it will be closer to 100k over the next couple of years are bigger than the possibilities that it will stay at 25k. The halving is just 190 days away. How many months is that? 190 divided by 30. This is less than 7 months away. So we are getting very close to the halving, less than a year, less than 7 months away from the Bitcoin halving. So my thoughts on Bitcoin, I'm bullish, guys. I'm bullish overall. Short term bearish, but long term bullish, so I don't mind that much. I bought a small position on Bitcoin and a separate small, but I won't tell you, actually won't tell you. I will only tell you if you get into our Wi-Fi money course, investing course. So those of you who are inside already know what I'm buying and I'm selling on a daily basis, where I share my signals. But besides that, the Spearhead portfolio is rising. I'm holding, I'm investing into my favorite positions, and I hope you enjoyed the last episode. Tell me what you guys are buying, and I'll see you on the next one. Peace.